Good morning, everyone. In this video, I'll talk about a trade that's still active and setting up right now in crude oil. So this is the note we sent to all of our members earlier today, which is around which volatility box models to use on which markets. So the S&P, the Dow, the Nasdaq, the Russell, and crude are all on the aggressive. Copper is on doomsday aggressive. Gold, we even had our signal of if we hit 1720.7 first, then we're going to use the aggressive models. So let's just quickly see what gold did there. And gold did not yet hit 17.7, so this is still an active test that's still open. So gold, we don't really know which volatility box to use yet. And natural gas, we already know we're ignoring because it broke outside of the models. So that takes us to the trade of the hour, which is in crude. Right, so my order in crude just got filled, but this is the trade in crude. So we had price breach, our aggressive volatility box. We have the edge signal. We got a retest of the clouds. My entry is at the cloud. Stop is outside of the volatility box where we do have that 17 round number, but really it's just the aggressive volatility box. And the room that we're looking to try and make on this trade is just to our cyan line. And so that's about 33 cents, and that's the risk on this trade. So it's a 1-to-1. If you tried to go outside of that 17 mark, that was about 50 cents of room. And so you could give it that same 50 cents on the opposite side, but that takes you outside of that cyan line. And so that's where you can make the decision on if you want to skew your ratio or just take the 1-to-1 trade based on your trading style. So far, it looks like we're getting the follow through in crude. We did get close to going outside of the clouds, but not quite enough. But we're really not out of the woods just yet. The target's right in front of 1620 at 16.21. So let's see if we can get this push down lower. That gets us out of crude. That gives us a small profit. Move that stop on the second contract to break even and see if we can make a move back down towards that gray line, which is at 15.84. And so that's really just the trade parameters. It's sort of self-managing, but hopefully this gives you an idea to walk you through what the trade looks like real time. For the rest of this video, I'll try and share some commentary with price sped up in the background. And so hopefully we can talk through price action and see if there's any clues that it gave us along the way, or at least observe what it looked like real time when a trade works out. At this point, we've hit our first target in crude, so we've been able to pay ourselves a little bit. That first target was at 33 cents, so that's about 330 bucks per contract minus commissions. However, now we need to do some trade management. We need to take our stop that we had from outside of the volatility box on that second contract and move that to break even. So at this point, we now have a risk-free trade for that second contract, right? Our second target is at the gray target line on the opposite side. That's about 71 cents away from our entry. Now, whether or not we get it, we have no idea, but if we do get it, we've been able to turn a simple scalper trade into a really profitable runner on crude that lets you take out 33 cents on the first target and 71 cents on the second target. At this point, this trade becomes much less stressful to try and manage. So we have a break-even stop, so if price reverses, no problem. We've already made some money. We've paid ourselves with our first target. If price goes to our second target, fantastic. We've turned a scalper trade from 33 cents into a positive winner of 33 cents on the first contract and 71 on the second contract. So that's also a really brilliant win. And so whichever way you look at it, it's that second contract that really starts to let you manage this trade without any emotions, just freely, because at that point, it's really, for all intents and purposes, free money that you're playing with because you've already paid yourself. So hopefully that gives you an idea of how this trade in crude works. Now, as we had this flush down lower in crude, that also triggers us into a potential long entry. So we start the same process over and over, and that's our process-driven approach. I hope this video helps to shed some light on how we approach trading every single day and the trading crude today.